Hi everyone, a massive warm welcome to 2023, our first Monday market update of the year. Couldn't be more excited to crack back in, especially after a pretty lackluster 2022, unless you were shorting the market, unless you were bearish on the market. Well, congratulations, you scored really big on that. Now we're looking forward to 2023. I'm going to just talk through some quick items, just cap off the year, and also maybe looking forward into what we're delivering now with our newsletter, so you can stay abreast of all the major happenings going on within the market. Let me crack straight in. I've got three things to share with you. And first of all, why not? Let's start on the yearly chart, because we've just had a close there. I'll get rid of that just there. Just want to show you what 2022 looked like in one candle. You can see the massive red candle there. The previous 2 years, or 3 years at least, have been absolutely sensational. So from the low there of around 3,000, we had a 2,100% gain over those couple of years since the COVID crash. Now we are following a very similar pattern seen in previous cycles, where we have 3 good years. So 1 year just recovering from the bear market and then eventually rising. Then the next year a bit stronger as we head into the halving. And then finally, we have that really strong bull market in the 3rd year. Then we have the big sell-off year. Market gets way too overheated, way too far over its skis. And then we have the sellers taking profits, and the full year, excuse me, of the bear market commences. Now, are we going to see, after this big sell-off candle for 2022, are we going to see this candle, which is open over here? You can see the start of this the green candle here does not mean it's going to be green all the way. It does not mean it's going to be red all the way. It's just started. But so far, we're just a little bit up from what we were just yesterday, when a few days ago when the candle closes. Are we going to see that recovery candle that, maybe brings us up to about 30,000, 40,000, maybe even a little bit higher? Look, who knows? I have my own thesis on that. I will be discussing my thoughts around that in the newsletter, which we'll release this week. Also released that to the masterminds. I released a Talking Crypto Thinking Rich, which is our Friday 40-minute episode, where I went in before the Christmas break and just highlighted the bull case for Bitcoin next year. And that doesn't mean that it's going to go straight up. In fact, I am betting on the fact that it's not going to go straight up, or in respect that we're going to see a bit of a mini boom and bust within this next year, just based on macro conditions, the recession, and also the thirst to bring stimulus back. Okay, just a couple of points here, just quickly. This is the first bearish engulfing candle that we've seen over these yearly processes. You can see the red candles in previous cycles have not fully been larger rather than the last candle. So the final candle of the bull market, generally we've seen a big blow off top, and that's what a lot of us, including myself, were expecting last year in 2021, towards the back end of the year, expecting that real retail explosion, bringing us to that crazy new all-time high, that over-exuberance above $100,000 US per Bitcoin. Just didn't happen in the end. And then we've had this big wipeout with FTX and a few things lining up. So this is the first time the big red sell-off year has eclipsed the previous year of gains. So you can see the big red candle, it's bigger than the last. The last two have not been bigger than this previous green candle. So that is a first. You could argue that that is a bearish picture over the yearly printing of these candles. So a trader would look at this and go, all right, well, we've closed beneath, we've closed, say, down here, it's bearish engulfing candle. There's every chance that we have another candle that goes even lower. I do not think that's the case, based on Bitcoin's programmatic supply and the thirst for central banks to continue printing. In my mind, that's what drives this market over those longer term cycles. You could argue that it's not driven by that, but that's my thesis. That's what I've seen over multiple cycles. So that's where I sit. So the yearly candle, yep, that's where we're closed. And now we've started a brand new year. We're going to see, and also here I've just marked in green the 2024 Bitcoin halving. That's where we anchor the market in terms of the halving cycle, and where generally we see the turning point in the bearish market to the sideways market, and then also to the bull market. So that's where I see things sitting. All right, let's pivot on over to Bitcoin on the weekly chart. Let's get rid of the guppy. So where are we? Okay, well, I just want to highlight one thing on the weekly chart, that we're seeing this tremendous downtrend in the RSI. So essentially, the bull momentum has just been trailing off. Eventually, this trend is going to break, and we're going to see a relief rally. And that's why, in many respects, I do expect that 2023, bit of a boom, bit of that relief, like we saw in 2019, where we had this if I just zoom back here, this big move up here in 2019 on some fundamental news. I can't quite remember what it was, but it went from the lows in the 3,000 all the way up to 14,000. Then we had the COVID crash after. So that's a bit of a boom, bit of a bust. Not quite in a bull market, but not quite in a bear market either. So I'm just looking at this RSI thinking, look, we are really approaching a decision point here at this trend line about that 34, 35 area on the weekly chart. It starts to move higher here. I'm already seeing bullish divergences here. And what I mean by that is you can see here that over this entire period where my cursor is over this area, we've just been trending down, going up in rising channels, breaking down, rising channel, breaking down. We're here again. Everyone thinks we're going to break down to new lows. If we have a look here on the RSI, the bullish momentum is actually getting stronger. So bang, bang, bang. So we're making lows in price, lower lows in price, but bullish momentum is strengthening. So that's telling me the sellers are getting much, much weaker. When you see these divergences, especially on the daily, you generally can pump the trade the other side and make a lot of money. On the weekly, it's giving you a lot more data. So I expect this to turn sooner rather than later. So that's where I see it. The beginning of the year is going to be pretty telling. We've also got a few Federal Reserve announcement, the FOMCs coming in, also inflation rate. And just on the end of that, so you can see here, I'm trying to build a case, the bullish case for next year, and I can also build the bearish case quite easily as well. But I think that is oversaturated at the moment. I want to just build a bit more of a positive outlook and forecast going forward. And again, that's what I'm going to highlight in my newsletter. And here as well, Michael Burry, I guess you can say he's made famous by the Big Short movie. He went heavily against the banks with the CDSs, so the credit default swaps, took massive amounts of insurance against the housing market going bust, which no one ever expected could even be possible, but it did. He wrote here that inflation has peaked, but it is not the last peak of the cycle. We are likely to see CPI lower, possibly negative rather, in 2H 2023. So I'm saying that's the second half. That's what he means by that. And the US is in recession by any definition. Fed will cut and government will stimulate, and we will have another inflation spike. It's not hard. That is exactly how I have been theorizing it likely goes for 2023. It's nice to have someone of his caliber kind of highlighting that as well. Doesn't mean it's going to happen, of course not, but this just feels right to me. Everything points to us being in a recession, inflation falling back, growth stalling. In a recession, you have to cut rates, or at least you have to at least stop tightening rates, and then you have to stimulate the economy with everything going on. So that's very much the thesis that we're running with here. And I've just written at the top here, he's been wrong before, but not about much. My bear case for 23 has been a vicious boom, a bust cycle. I'll explain this in the first edition of the weekly newsletter. So just keep this in the back of your mind that we can have that recency bias where we've just looked back on 2022 and just been walloped over the head time and time again in a vicious bear market. You have to look at what previous cycles have told us is that eventually the sellers do exhaust themselves, and you have to look forward. What is going to happen next? How is the money positioning? Are we going to have that swing back up as the market is anticipating the Fed's going to have to cut or at least pause rates, stimulate the economy again? The globe is heading towards a recession. The US is more geared towards being able to handle that because of the global reserve currency currently, and they really have that lever on economy on, economy off. And that's what we're going to see. Are they going to buckle under housing market crashing against CPI falling back? They do not want to keep doing this. Because it is putting a contraction on their economy. And again, 2023 is going to be a roller coaster in my opinion, but it does not mean you cannot make money in this environment if you are seeing the full picture, taking advantage of any massive relief rallies into this kind of environment, and not getting too aggressive as well, just playing how it lies and having a strategy for whatever happens. All right, guys. So if you've enjoyed this video, make sure to leave us a like. If you're listening on the podcast, thank you so much for your support as well. Don't forget to wait for our new weekly release of the newsletter on Thursday. So for this Thursday, we will be releasing the top part of the newsletter where we talk about a big topic and discuss through it. Then the following week, we'll look at the technical aspect and a bit more macro as well. And then the FAs will come out in the third week, and in the fourth week, we'll release the signal. So not much has changed apart from we are cutting up and putting in more bite-sized pieces throughout the month. It's going to allow us to be a bit more relevant with the content as well. So have a wonderful day, guys, and welcome back to these crypto markets. Let's hope for a much more positive 2023. Bye.